It's a hard truth. Most small businesses are not struggling to find new customers. They're struggling because managing finances is overwhelming and stressful. You might know the feeling of being paper rich and cash poor, where you have thousands of dollars in sent invoices, but $0 in the bank to actually pay the rent. This lack of clarity leads to missed opportunities and increased debt. If you're tired of playing bank account roulette, this is your step-by-step guide to fixing your financial foundation so you can finally stop guessing and start knowing. Step 1. The church and state rule. The first step, before you look at a single spreadsheet, is what I call the church and state rule. You must strictly separate your business money from your personal money. I know it sounds basic, but one of the biggest mistakes small business owners make is mixing the two. When you buy a business laptop and a personal dinner on the same card, you create a profit illusion. You have no idea if your business is actually making money or if you are just funding it with your personal savings. This mistake makes it incredibly difficult to track your business expenses accurately and can lead to serious tax issues down the road. Now, furthermore, if your funds are mixed, you lose the clarity needed to make smart financial decisions. Here is your immediate action step. Open a dedicated business bank account and obtain a business credit card. It doesn't need to be fancy, but it needs to be separate. Ensure that every single dollar earned goes into business account first and every business expense comes out of it. This simple separation ensures your financial records are accurate and up to date. It gives you clearer financial records, makes tax preparation significantly easier, and protects your personal assets. Step 2. Automating the shoebox. Once you have that separate account, you run into the next problem, the shoebox method. If you're saving physical receipts to manually type into a spreadsheet on Friday nights, you are slowing yourself down. Manual data entry is prone to errors and wastes hours that you could spend growing your business. And this is where you need to upgrade to a system that puts your admin on autopilot. And that is why I'm excited to partner with Xero for this video. Xero is a cloud-based accounting platform designed to give you real-time insights into your financial health, whether you're at your desk or on the go. Instead of acting as a data entry clerk, you simply connect your bank accounts to Xero. This enables automatic bank feeds, which streamline the reconciliation process by automatically importing your transactions. You stop typing numbers and start just clicking OK to confirm them. It also supercharges how you get paid. You can create professional invoices directly in the platform and customize them with your logo to maintain brand consistency. Now, on the flip side, Xero helps you track your own bills by allowing you to upload them and set payment reminders, ensuring you never miss a deadline or get hit with late fees. You can even use the mobile app to snap photos of receipts and track expenses while you're out and about. If you're ready to stop guessing and start knowing your numbers, Xero has a special offer for you. As of the time of filming this video, there is a 90% off for 6 months offer available for you. You can click the link in the description below to sign up and start freeing up your time for the things that matter most. Step 3. Cash flow versus profit. Now that you have your systems in place, we need to learn the most painful lesson in business. Profit is not the same thing as cash. You can be profitable on paper because you sent out a large invoice today, but if that client doesn't pay you for 60 days and your rent is due tomorrow, well, you're in trouble. Poor cash flow is one of the primary reasons small businesses struggle, as it directly affects your ability to pay bills and invest in growth. Now, to fix this, you need to understand your cash flow cycle, knowing exactly where money comes in, where it goes out, and how long that process takes. The best strategy here is to create a cash flow forecast. We recommend projecting your cash flow needs for the next few years, but even a simple short-term forecast works wonders. By estimating future income and expenses, you can identify potential cash flow gaps before they happen. If you see a shortfall coming in the next 6 weeks, you can take action now, like adjusting inventory levels or negotiating payment terms with suppliers to ensure you have enough liquidity to survive. Step 4. The tax vaults. The fastest way to ruin a growing business is an unexpected tax bill. A common trap is seeing a payment land in your account and assuming it is all yours to spend. However, managing your small business finances must include solid tax planning. You need to understand exactly which tax requirements apply to your specific situation, such as income tax, payroll tax, and sales tax. If you fail to prepare for these obligations, you risk facing penalties and interest charges that eat into your margins. Now, the strategy here is proactive preparation. Keeping detailed records of your expenses and income is critical for tax purposes and can help you minimize your tax liability. And this is where your bookkeeping habit pays off. Having accurate, organized records makes tax preparation significantly easier and ensures you comply with tax laws. To avoid the end-of-year panic, implement a tax vault mindset. Effective tax planning ensures that funds are actually available for tax payments when they're due. So instead of scrambling to find cash at the deadline, you should estimate your tax liability and set aside funds throughout the year. Ensure you're always ready. Step 5. The monthly review. Finally, you need to build the habit. Financial clarity is not a one-time step. It is a rhythm. Monitoring and analyzing your financial performance is vital for tracking your progress towards your financial goals. We recommend scheduling a CEO date with yourself regularly to review your financial statements. Using a tool like Xero, you can generate essential reports such as profit and loss statements, balance sheets, and cash flow statements to get a clear picture of your company's health. Here is what you're looking for during this review. Profit and loss, P&L. This document provides an overview of your revenue and expenses, helping you understand if you're actually making money. Cash flow. Analyze your inflows and outflows to maintain stability and ensure you have enough daily liquidity. Key trends. By keeping an eye on these reports, you can identify areas that require improvements. For instance, if you see a decline in revenue growth, you may need to adjust your marketing strategy to attract more customers. Similarly, if you notice a decrease in profit margins, it might be time to review your pricing or reduce expenses. Regularly reviewing this performance ensures that your financial plan aligns with your goals and allows you to make informed decisions about the direction of your business. Now, I want to mention that Xero has a special offer for you guys. You can get 90% off for 6 months using this link. Terms and conditions apply. Managing finances doesn't require a math degree. It requires a system. By following these steps, separating your accounts, automating with Xero, and forecasting your cash flow, you gain greater control over your finances. Thank you so much for watching, and I will see you in the next video.